can we look at the corporate landscape really good, and then I want to come back to Singularity Net. I mean, right now, obviously, OpenAI dropped ChatGPT, got everyone talking about it. It went from 0 to 1 million users in 4 days, which I guess is the fastest adoption of technology that we have known of. Like you said, in the background, Google's Lambda was probably more capable, but it wasn't public. And, there's probably other systems out there. But we see the major tech platforms probably in control of the major, at least large language model, narrow AIs. And that's probably specifically Google, Facebook, Microsoft via OpenAI. And
I look at that a little differently because I think in the last 2 years we're actually seeing a new vulnerability to these big tech platforms, which suggests to me that in the Western world, the era of dominance of these big tech platforms is ending, and they're starting to decline, like IBM and Wang and Honeywell did when the PC came out. I mean, if you look at it, I mean, Facebook is going down ridiculously fast from where they were. I mean, not that the platform will necessarily go away. Like MySpace is still there; it hasn't gone away. But the dominant role that Facebook had is really not there anymore, right? Like I only use Facebook now every now and then to check on like my old high school buddies or something, right? And Twitter, Elon Musk is doing a remarkably good job of driving it into the ground for whatever reason in the depths of his fascinating psyche, right? But now Google suddenly with Chat GPT, like we can see Google sees a risk that their search hegemony won't work anymore. Like all the cool stuff they've done has been powered by revenue from search, right? But if people are going to chat with AI systems to figure out what's going on, they don't need a search engine very often anymore. Then the search engine becomes a utility you go to every now and then, rather than the primary way that you interact with the online world. Then suddenly, then Google is not the kings of the world anymore. Already, I mean, even before the recent round of layoffs, Google was not where cool young people wanted to go work anymore. It was for a long time, right? That was like not just a way to make money and something to put on your resume, but it was like an awesome thing going to work at Google. That was like the destination of your life, right? It was like getting into MIT or something. Then for a while, it was more like, well, kind of cool. And if I go there for a few years and have it on my resume, it can help me to get VC money to start my own company, right? And now, after they laid off like 18,000 people or whatever it is, in such an obnoxious way of just sending them auto-generated emails in the middle of the night and cutting off all their email account. Now people can see Google is no cooler than SAIC or something, right? So I mean, I think they've lost their ability to recruit every cool young researcher and software developer, and they can see their hegemony as the front end of the internet at risk. Now, I mean, Microsoft has Chat GPT, which is cool. On the other hand, I mean, we're going to see open source models which are as good or better than Chat GPT coming out within the next year. No question, right? And then, I mean, how much differentiating value does Microsoft really have? I mean, they can integrate it into Bing, but they've never gotten anyone to use Bing, right? So I mean, I think,
is it still capital intensive, Ben? Like, does it still take billions and billions of dollars to do all the LLM processing, or once it's done, you can outsource it?
So training models is expensive, but what we're seeing is after the first time, people figure out how to optimize it. So like stable diffusion now, using optimizations that have been figured out in the last 6 months, you could train your own stable diffusion image generation model for a couple $100,000 US on a GPU server. So
Whereas before it took before it took 500
Or it's
million.
millions. It's millions. Yeah.
Millions. Okay.
Yeah. So, I mean, it's expensive, like in the big picture, right? I mean, it's expensive if you're like an undergrad student in Ethiopia or somewhere. You can't just train it on your laptop at home. On the other hand, it's within the scope of a startup company, or it's within the scope of whatever government agency wants to do it. Now, Chat GPT is still more expensive than Stable Diffusion, but I mean, with advances over the next couple of years, I think that's likely to come down to the same magnitude. Like people figure out once someone's got something done for the first time, then people will figure out how to make it more and more and more efficient. I mean, just like the speed with which someone can run a mile keeps getting faster and faster. Like once you see what's possible, then you know what the target is. You can keep getting better and better. So there is certainly an advantage to having a lot of money. On the other hand, the power of open source is significant. It wasn't that long from having DALL-E, which was proprietary for AI image generation, to having Stable Diffusion, which is open, right? And so, I mean, I think we're seeing venture capitalists putting money into creating open source versions of what these big tech companies are doing, and this is a positive and interesting trend, and it's because the VCs know that open source is a real way to make money, right? I mean, you don't have to be closed and proprietary to make money, and it's hard to compete with the big tech companies at closed and proprietary AI models. But if you go open source and you can build an open source ecosystem around your thing, then it doesn't take as much money, right? So I mean, I think the advent of AI gives an opening actually to chip away at the hegemony of these big tech companies. And the CEOs of Facebook, Microsoft, and Google understand this better than anyone on the planet. And these guys are so fucking scared of the disruption because these guys know the history of technology very well. They know the innovator's dilemma very well, and that they know very well that they face an almost unsolvable problem, which is to maintain their revenue engines coming in and keep delivering shareholder value and not introduce risk that will cause their share price to plummet, but at the same time plunge into the great unknown of a new business market. Like Google has been wrestling with this forever, right? Like they created Google X. They bought DeepMind. They reshuffled and renamed to Alphabet so that search will be just part of what they're doing. They've been trying so hard to deal with the problem of like minimizing risk and keeping the revenue engine going while still innovating, but they failed, right? They haven't done anything innovative. So I mean, they haven't done anything innovative that has really contributed to the bottom line. I mean, DeepMind has done amazing stuff with cracking protein folding in AlphaGo. Of course, transformer neural networks, which is underlying ChatGPT, was invented in Google Brain and Mountain View. But so far, Google has not made a huge innovation that has contributed massively to their bottom line revenue-wise, right? They're still just making money by pretty simple statistical AI applied to search.
Right.
So I mean, I think
that's because the innovator's dilemma always wins, right?
It seems like you can't get around it. It's built into the business structure, right? I mean, these are large public companies, and they have to maximize shareholder value, and they have a fiduciary responsibility to meet the metrics that Wall Street wants. I mean, why did these Silicon Valley companies do all these layoffs, right? It's not that the people were useless. It's not that they didn't have money to pay them. It's just their revenues went down because the pandemic ended and everyone wasn't spending all their money online anymore. Revenue went down. So to meet Wall Street's metrics, they have to bring costs down. The way to bring costs down is to lay off people. So they set an algorithm to figure out who can they lay off without impacting revenue. And I mean, that's the way you think if you're a big public company trying to maximize Wall Street's metrics. But it's not the way you think if you're trying to own the next wave of development, right? Because what the Wall Street metrics don't bake in is that by algorithmically laying off people with high performance metrics, I mean, you're killing your ability to recruit the young generation who cares more about doing something meaningful than they care about getting a big salary and working for a brand name company, right? So I mean, it's really bad for long-term growth, but really good for Wall Street metrics. And you almost can't help thinking that way once you become a public company, right?
Yeah.
Because you have this. I mean, you can see the same thing in Amazon, right? Like Amazon. So Jeff Bezos quit to go get his rocks off and have a good time, and everyone's got to go through their midlife crisis period. I did it prematurely a long time ago, right? But you look at what's Amazon doing. So they're shutting down their brick and mortar stores and their supermarkets and so on. But I mean, that's exactly the wrong thing to do, right? I mean, Amazon is positioned to take over supermarkets and brick and mortar stores, right? But that's exactly the kind of gutsy thing that Jeff Bezos did. And they're shutting down Alexa, right? Why the fuck are they shutting down their conversational AI system division right when ChatGPT is showing that conversational AI has legs, right? I mean, they're not disabling the Alexa devices, but they laid off the whole AI team behind Alexa, right? So why would you lay off your whole conversational AI team right when the conversational AI revolution is unfolding? I mean, it's incredibly dumb if you want to own the future. It's not the line of thinking that led Amazon to grow from a bookseller into a global giant like it is, right? But I mean, that's what you do when you're a big public company, sort of churning according to Wall Street metrics.
So Jim Rickards has just recorded a video that's not available to anyone in the public, and he's going to be talking about how this upcoming recession is going to be fast, it's going to be bloody, it's going to be nasty. But at the same time, he's going to show you how you can position yourself to profit from all of this chaos. Now, we've made this video only available to our viewers. Go to londonreal.tv/Jim. Watch that immediately. I can't say enough good things about Jim Rickards. He understands the global economic system better than any guest I've ever had on London Real. His predictions are almost uncannily true, and you can learn how to profit from his vision, from his expertise, and his understanding of economics. So go to londonreal.tv/Jim or click the link below. It's an excellent, excellent look on what's going to happen in the future and how you can position yourself to profit from that. Jim is one of the best in the business, one of my favorite guests on London Real, and he's very, very good at predicting the future and showing us all to profit from it. So click the link, and I hope you enjoy. Hey, it's Brian Rose, founder of the DeFi Academy. I've told you my 4-week crypto bootcamp is amazing, but don't take my word for it. This is what my students are saying.
The DeFi Academy was an amazing experience for me. It took me totally out of my comfort zone.
In this course, I was challenged, I was held accountable, and pushed to do things that honestly weren't always easy.
It's been phenomenal, and I can't believe we're already up on our 4 weeks. It has flown by.
Going through this DeFi accelerator by far was one of the best courses I've taken.
You do this course, you really get into the nitty-gritty of the activities that will make you comfortable with decentralized finance.
Thank you so much to Brian and everyone at London Real and the DeFi Academy for even putting together an amazing course like this.
Anybody else that wants to do it, please sign up. It is well worth the money.